Hello, and thank you for joining us today for our latest Viriathus investor briefing. Today we have with us Mr. Sergio Rotondo, who is the Executive Chairman of Challenger Gold Limited, which is listed on the ASX under the symbol CEL and the OTCQB under the symbol CLLEF. Challenger Gold is a copper and gold exploration company with aspirations to become a globally significant gold producer, and they recently announced strong results for its flagship Houlilan Gold Project in San Juan, Argentina. Sergio will be providing us with an overview of the company, details on those great results, as well as the outlook for the company going forward. At the end of the presentation, investors will be able to ask questions. So without further ado, Sergio, please take it away.
David, thank you very much for the introduction, and thanks everyone for the time and for being here. It's a pleasure for me to talk about our company, our project, and to give you a brief about the scoping study we just presented to the market just some days ago. So about Challenger Gold, the company, we have two assets. One is Houlilan, the asset we are going to talk about. It's in Argentina. Challenger owns 100% of the asset, and it has 2.8 million ounces of gold equivalent. And then we have another asset in Ecuador. We have 4.5 million ounces. Between both of them, we have 7.2 million ounces of gold. In the ASX, our share price now it's 8 cents, and the market cap and the enterprise value it's $100 million. There's a very good opportunity here, because when you see the amount of ounces that the company has and the market value, it gives us a value of $14 an ounce, and our peers are trading above $60, which is 4 times more. So it's a very good opportunity. It's a very tough market at the same time, but the company is going to go into production in the next couple of years, and I will show you how we are going to do it. About ourselves, my name is Sergio Rotondo. I'm the executive chairman of the company. I'm the founder and one of the largest shareholders. Together with my CEO, Chris Canard, we have 8.5% each of the company. So we have a lot of skin in the game here. We are not employees. We are not here for a salary. We are not here for a bonus. We are here to make it happen. We are here to build the mine we started 40 years ago. And in order to build a mine, you need a team. We have Dr. Sonia Delgado. She is our Argentina country manager. So she's been in the public sector for a long time. She has a lot of connections in Argentina at the national level and provincial level. Then we have Mike Civic. He's our COO. He's been working for Barrick Veladero for the last couple of years, and then he joined us. And he's going to be the one that, in terms of engineering, he's going to build the mine. In terms of financial model, I will be showing you the scoping study we just present. So it's a 7-year mine life study, although Houlilan is way much bigger. So we were talking about 2.8 million ounces, and this scoping study was aimed to show something doable. It's a very tough market, and we want to show something high grade that we can build it ourselves in the short term. But in the next 4 months or 5 months, we are going to be showing the market the pre-feasibility economic study, where we are going to be showing the whole project and the big open pits. I'm going to go there very quickly. So the scoping study we just presented, it has 0.95 million ounces. It's a mixed operation between open pit and underground. We are thinking about 1 million tons per annum plant. And the revenue we are expecting is $1.5 billion. The NPV5, which is the net present value of this, is going to be $400,000. And one of the best things we have here is the cost. So Houlilan is going to be very cost efficient. We are thinking about an all-in cost of $830 per ounce. This is really low, and this is going to be positioning us in one of the lowest cost producers of the ASX. Here is when you see the quartiles and the cost and the cost of production of the other companies of the ASX, we are going to be around the 5. So getting backwards here and talking about the capex, we are going to need, in order to build Houlilan, a very low capex, which is $152 million for a project like this, which is going to have a revenue of $1.5 billion, and it's going to be producing almost 1 million ounces of $152 million for capex. It's really low and it's doable. And one of the best things is that the payback of this project, it's only going to be 1 year, and basically it's 1 year and a quarter, which maybe it's a year and a half. Why Houlilan here? And why this is a very good opportunity? Our project is high grade, low capex, and low opex. When I'm talking about capex, it means capital expenditures, and this is the amount of money the company will have to invest. And opex means operative expenditures, which is how much money is going to cost to operate this mine. And because this is high grade, it's going to be like very cost effective. And one of the best things is it's placed in San Juan. San Juan was chosen by the Fraser Institute as the first mining jurisdiction in Latin America. So if you have to choose a place to be in order to do mining, it's going to be San Juan. At the same time, Houlilan, it's only 80-minute drive from the capital of the city. So you take a car, 80 minutes later, you are in Houlilan. The road, it's double seal road, it's a brand new road. And from the road, you see the mine. So it's very close, it's very easy to get in there. So the logistics are going to be easy and cheap at the same time. Because it's low capex, and because the mineralogy of Houlilan, it's simple, we think that during the first couple of years, the production and the scoping study basically shows that the production is going to be very high grade, and because of that, the repayment. At the same time, when you have high grade, the operation cost, it's low, and the operation cost is directly linked to the amount of tons you produce. When you have high grade, you have more gold for the same amount of tons. So the cost is going to be related to the amount of tons you throw into the mill. So when you have high grade and high recovery, this is what you are looking in a project like this. There are two other costs that are very important for an operation like Houlilan. One is the cost of the energy. We have only 7 cents per kilowatt hour. And the best thing is not the cost. It's going to be 100% renewable energy. We have an MOU signed with one of the biggest companies of the country, and they are going to provide us for all the energy we need at 7 cents a kilowatt hour. This is going to come from solar farms they have all over the country. So in order to get very low footprint for this project, this is what you are looking for. And at the same time, the other costs is going to be fuel. And in Argentina, fuel, it's quite cheap. So all the trucks and all the operation that is going to base in fuel, it's going to be very cost effective. I'm going to show you real quick a video here of what Houlilan is. So there you can see the hills, you can see the project. We have almost 60 people working there. We used to have 10 rigs, and those 10 rigs were going on for, of course, the whole day. And because of that, we've drilled one of the biggest campaigns in the history of the country, and that was 250,000 meters. Because of that campaign, we could show the market a maiden resource, and that maiden resource was 2.8 million ounces, which led in this scoping study. From that point, you can see the road, and that it's very, very close and close to the city as well. So, talking about the CapEx, as I was telling you, we are going to be using $150 million for the pre-production phase, which is going to be 130. And then we are going to think about $18 million more for any, that things can happen. So in case something happens, we are going to save those $18 million. But in worst case scenario, it's going to be 150. And then we are going to be building the underground part of Houlilan, which is not going to come from the pre-production CapEx. So we are not going to go to the market, or we are not going to take debt for that, because it's going to come from the cash flow. So about the geology of Houlilan, when you see this picture here, you are going to see the red and purple. These are the high grades. And when you have a deposit like this, what you need is high grade on top, on surface. And Houlilan has, the beauty of Houlilan is that has mineralization on surface, which what we are thinking is we are going to start with an open pit. This open pit, it's going to turn into underground mining in order to chase the mineralization we have down there. And we are going to be treating, or we are going to be processing 1 million tons per annum, which is going to be 140,000 ounces a year. And it's going to be 1 million ounces over the life of the mine, which is going to be 7 years. In terms of underground, the development of the underground mine is going to cost $28 a ton mine, and then the process of that tonnage is going to cost $35 a ton, which is going to be a total of $63 a ton. I don't want to get so technical in this, but the view on the grade and how we are going to process this, it's not going to be focused on the type of mineralization we are going to have. It's going to be focused on the grade. So during the first years, we are going to be throwing to the mill what we are going to take from the open pit, which is going to be very high grade. And because of that, the revenue is going to be high and the payback is going to be very quick. And over the life of the mine, we are going to be throwing different kind of silver, zinc, and lead, which is the 4 concentrates that we are going to be producing. One important thing is that along the 7 years of production, we are going to be working at 4.32 grams a ton, which is very, very high grade. And because of that, the cost is going to be low. You have mines all over the world that maybe they work with a 0.5 gram per ton, which is almost 10 times lower than this, and they win money. So we are going to be working with between 8 and 9 or 10 times the amount of gold in order to get per the same ton of rock. So that's why the numbers are so good here. This is about revenues. And the key takeaway here is we are going to be producing 88% gold, although we are going to be with different kind of concentrates. We are also be producing silver, zinc, and lead. But 88 of this is going to be gold, not in terms of quantity, but in terms of price. In terms of cost and how do we think we are going to be working, 60% of the total cost is going to be operations. Then, as we are going to be producing a concentrate and we are going to ship that concentrate to the ports, we are going to have 8% refining cost and 11% transport cost, and then 21% is going to be royalties, which are going to be included the provincial royalties, export taxes, and that's 21% of the cost. And that's, of course, it's going to be around $840 an ounce. One thing that we are very proud of is ESG work we've done during the last couple of years. So we worked towards the SDGs of the United Nations. We have worked with the community. We have worked in order to provide different kind of opportunities for the people of San Juan. When we started this, we helped a lot of mining service providers. They were drillers, labs. Most of them, they are working now in some other places. They started with us very small, and together we grew. And now they have maybe 15 rigs, 10 rigs. They work all over the country, and we are very proud of that. In order to, point 5, which is gender equality, our country manager of Argentina, it's a female. So for us, this is very important, not only because we have more than 20% females, but the person that it's leading the project in the country, it's a female. According to water, we have drilled water bores for San Juan. We have donated those water bores for the community of Ushum, which is a department that we are working on. And we are looking to work in others 8 SDGs during the next couple of years. In terms of climate action, we are one of the only companies, and the only company in the country, that we are certified into the neutral carbon footprint. This is very important for us. The certification is international, though the certificate is in Spanish. And we are going to be working to be one of the first mines in the world in order to be zero carbon footprint when we are going to be into production. So we are working with Mining Plus, and this is what we are going to do once in production. In terms of Houlilan, when we started, we were very small. This is the red dot you see there. And the key highlight here is mineralization. It's open in all directions. It's open in depth, but at the same time, it's open to the north, to the south, west, and east. So we have a big exploration team now working on the ground. We are looking for the second Houlilan, and if we find it, we own all the mining tenements around the mine. So if we find it there, we already have those tenements. We have worked with the government of San Juan, and we are very proud of that. So they supported our operation since we started. And this is important because the company has delivered, and the province has supported our company from the very beginning. We own also the land. So we have bought 20,000 hectares, which is very important in San Juan. If you want to lodge an EIA, which is Environmental Impact Assessment, which we lodged last April, you have to own the land or else have a contract. We do own the land. So there's nothing in the way of Houlilan, how it's now in production for maybe two more years. Next steps, we already presented the scoping study. We are going to be working on the pre-feas, and maybe mid next year or before that, hopefully we are going to show the pre-feas, then feasibility and bankable feasibility, and then production. We also have Ecuador. We are going to be presented the update of the maiden resource of 4.5 million ounces, and this is going to be a very good number. And we don't know yet when we are going to be presented, but it's going to be soon. So very quickly, this is pretty much the scoping study, and happy to take any questions.
Okay, that was fantastic, Sergio. Thank you so much for that. Let's go into the Q&A box and see what we have. First question, what is the water access like at the Houlilan project?
Basically, we have very big water table underneath Houlilan. So we have access to a lot of good quality water. We've drilled 2 holes, and the amount of water and the quality as well. I don't have the number on the top of my head, but it was 300 cubic meters an hour, something like this. And the quality it's what you need if you are going to put this into production. So yeah, we have the water we need. This is not going to be an issue. It's not connected with San Juan. So and it's there. We already drilled 2 bores in our tenements. Yeah, we are not going to have any issues with that. That's for sure.
Okay, great. Next question, is it really possible to build a zero carbon mine?
It is. That's a very good question. It is. It is. You have 2 big issues there if you want to do that. The first one is the energy you're going to use, and because of the contract we have signed, which is an MOU and a contract, we are going to be provided with 100% renewable energy. So that's like 0.5% of the carbon footprint. If you are off-grid, so maybe you are not going to be able to do that. The other thing is we are not going to be taking care of the solar farm, which that was a scenario for us, and we don't want that. We don't know how to do that. So we are going to have an offtake agreement. Professionals are going to be taking care. We are going to pay a very good price. We are going to have the energy we need 24/7, and that's all. So that's pretty much half of that. And then you have the trucks, the diesel, and all the things that are going to be adding to the carbon footprint. So we are planning to get or maybe some forest around Houlilan where we can offset our own carbon footprint. We are just working on that. But if you offset those carbon footprints, that the carbon footprint you have, that's doable. It's almost impossible that you don't produce a carbon footprint. You can offset that. And this is the aim. And this is what all the companies, not in mining, because in mining it's difficult because the amount of money of carbon you produce, but in other type of businesses, it's like you can offset yourself. And at the end of the day, like the impact is going to be 0.
Okay. Next question. How will you get the capital to build the process plan, and do you see risk with high rates and inflation?
Well, that's another good question. So we think that we are going to buy the plant from China, and whenever you go and buy the plant, they are going to give you finance. Or whatever you buy, maybe you can go to Germany and whoever sells you the plant, it's going to give you finance because the business they have is to sell you the plant. And that's pretty much, I was talking about 150, let's talk 130 because we are not going to put the liability in the middle. Half of that, or maybe more than half, is going to be the plant. And the other thing is going to be around between 50, 40. The options we have now is to get some debt if we have, because by that time we are going to have the bankable feasibility completed. Then you can do some stream deal. So we had some options and offers to do some stream deal, where basically what it means is you are going to sell your product in advance for money. We are not looking for any royalties or anything. And the other thing you can do is go to the market, of course. But as I was telling at the beginning of the presentation, I'm a big shareholder of the company. I'm not an employee. I'm the founder. And the last thing we want to do is to go to the market and dilute ourselves. So we are going to look for the best outcome, thinking like shareholders, not senior managers or directors. So our interests are going to be aligned 100% with the interests of our shareholders. So it's going to be some finance on one side. It's going to be some debt for sure, depending on the market and the rates. But one good thing there is that the recovery and the period is going to be very short. So this 150, it's going to take a year and a half to recover. So if the interest rate is high, so at the end of the day, it's going to be 18 months. So the impact is not going to be a big impact. So I think, I don't know if I answered that question, David, with this.
Yes, I believe so. Okay, moving on. Next question. Regarding the mining permits, is it a complex process, particularly with what you're hearing about government intervention in South America, et cetera?
Well, basically, we are in San Juan. San Juan, according to the Fraser, it's not that I'm saying this, it's the Fraser Institute. They have chosen San Juan as the best mining jurisdiction. All of them are very pro-mining, from the governor to all the ministers and the people of San Juan, the community, all of them are miners. So they want to help the companies because during the last 20, 30 years, San Juan is what it is now because of mining. San Juan is a beautiful place to go where you can have the biggest companies in the world working there, and the government supports that. So very pro-mining. If you do the right thing, the government is going to support, and we are an example of this. There are some companies, or maybe smaller companies, that they want to do some finance deals, and they are not going to invest. So if you do that, you are not going to have the support of the government for sure, and that's the way to go. But we invested a lot of money here. We've drilled the biggest campaign in the history of the country, and the support from the very beginning was there. So the permits are not an issue in San Juan. Of course, they are going to look, once we submitted the environmental impact assessment, what they are going to be looking is, okay, you need to do the right thing in terms of environmental for the province and for the environment, of course. And with this study, they don't care if you win money or not. They are there to protect the environment. And that's a very good thing, because we want to do it the right way. As I was saying, we want to be zero carbon. So if you are going to do this, so the environment is going to be big issue, and you are going to do the right thing. So if you want to do the right thing, and you are going to move forward, and you are going to put the money into production, yes, the support is going to be there, and the permits are going to be in time. There's no intervention in Argentina. There's no intervention in San Juan. Maybe in South America, in other countries, I don't know, but not in Argentina. So all the companies, nobody have a problem, and nobody will have a problem, because it's not in the interest of the country. I'm Argentinian, you can notice because of my accent, but it's not in the interest of the country to intervene. So if the company wins money, they are going to be paying taxes, and if you pay taxes, the country is going to win, and the community is going to grow, and everybody will be happy. But for that, you have to export, of course. So, but intervention, it's not a problem. I've never heard that.
Okay. Next question. Is there any interest from any majors in the area?
Well, that's a very good question. Here, I'm going to go to this slide. We have all the orange tenements there. Blue ones, it's Newmont, biggest company in the world. So they are good neighbors. They are there. But yeah, we are not looking for doing a deal. Of course, we are open to, but this is not what we want. We want to put this into production. Because of the amount of ounces we have, yes, it's a big mine. Whenever you have more than 2.5 million ounces, you are a tier 2. And if you have more than 5 million ounces, you are tier 1 producer. But what we want to do here is to put Houlilan into production ourselves. We talk to the industry, of course. We know pretty much everyone, but yeah, it's not what we are looking for, although we are open if somebody wants to talk. But definitely Challenger will put Houlilan into production without a major or without anyone else.
Okay. Next question. Can you talk about the dynamic between a $2.8 million 2.8 million ounce resource, but only a 7-year mine life?
Yeah. That's a good and tough question. Yeah, sure. When we presented the scoping study, what we were looking for is to do something doable. So we put some focus on the high grade. So, okay, we are going to be showing that this is doable. And here's in the annex, I have it here, I have a lot of slides. This one, yeah. So this is how the future mine is going to look like if we put the whole maiden resource, or the whole resource, which is 2.8 million ounces. So it's going to be not so much underground. It's going to have a lot of open pits, big open pits. And because of that, the mine life is going to be way bigger. So 3 million ounces, almost 3 million ounces, we are going to be producing, according to the scoping study, only one. If you look at the 3 million ounces, well, this is how it's going to look like. We don't know like how many ounces are we going to be producing yet in this case. So this is going to be presented in the pre-feas, which is going to be in 6 months at least. But what we know is we are going to have a much bigger project with higher revenues, higher EBITDA, higher NPV, higher everything. And we think that it's going to be higher in production per year as well. So the mine life has to be like longer, of course. But this is going to be shown, and if it's doable, which is doable, in the next 6 months, and this is how it's going to be. Like this is a draft. I had it here for another meeting I had, so it's not official yet, but yeah, this is how it's going to look like.
Okay. Next question. Regarding your tier 1 neighbors, is there an option to toll, treat, or process with other mills close by to save on the costs?
There's no mills nearby. And the other thing is, well, maybe there are, not so close, but the thing is, you have to see if that mill it's compatible with the process and the type of mineral you have. So I don't want to talk about names, but there's a deposit very close to Houlilan where the plant they have, which is a very nice plant, and they were producing a lot of ounces, it's not compatible because it's a different type of mineralization. So whenever you are going to build a plant, that plant is going to be custom made, tailor made for you. So you have to be lucky enough to see, okay, I'm going to use this mill here and it's going to be compatible. And at the same time, you have to add transport costs, which it's not going to make any sense. So we already thought about that, not with us, but some neighbors we have told us, okay, guys, you want to process this if you are in production, and you have to have a very high grade in order to win money. Yeah, this is not the case if you want to do something bigger. If you want to send your ore somewhere else, you are going to be thinking about the very high grade, which maybe we are going to be talking about above 10 grams. Like it's going to be very small, and this is not what we want to do. We want to build something big.
Okay. Well, Sergio, we don't have any more questions. So I'd like to thank you for your time in this excellent presentation and the value you've provided to interested investors. A recording of this is going to be made available and circulated to all those who have registered, and it will be broadly available on the Viriathus YouTube page. So thank you very much, Sergio. Thank you for our attendees for attending, and have a fantastic day.
Thank you, David. Thank you all for the time and for being here. It was my pleasure.
Wonderful. Thank you.